did Saudi Arabia just save the world?
Hello and welcome to today's Daily Blitz. Financial markets are plunging as a result of a lack of an OPEC agreement, which means the world will be flooded with oil. So the oil price was down about 30% and financial markets crashed, with the FTSE opening down about 8%, the same in Europe. And US Treasuries were limit up on the open, meaning that they weren't allowed to rise any more before the market opened. So financial markets are seeing all of this as disastrous news. It couldn't really be any worse, hasn't been any worse since 2008, but Boaz, you see things very differently.
Yeah, so it does appear to be that the conventional narrative is that the Russia and OPEC oil fallout appears to be what is roiling markets now. So after 2 weeks of getting battered and bludgeoned from coronavirus fears, it seems like they've been given another haymaker by the oil-producing nations who have decided to drown the world in oil. And it's very fascinating to look at the various motivations behind this latest decision from both Russia and OPEC and sort of implicitly from the US to just keep pumping oil and to really crush the price. So on the US and Saudi side, you have the benefit of crushing the Iranian regime, which has already been hit very hard by the coronavirus, by reducing their oil revenue. So it's going to stoke even more chaos within one of their enemies. Whereas on the Russian side, you have the opportunity to crush the US fracking base, the US shale oil production facilities. As they have such a high cost of production, well, they won't be able to survive if you manage to push the price low enough. So it's very interesting to see how this is really playing out. It looks like maybe the US is willing to take a hit to their domestic shale production base. Maybe we're going to see the Federal Reserve start bailing out these energy companies, maybe not. But it's all in order to crush the US's enemies, which is Venezuela, which also has a high cost of production, and Iran, which Saudi, of course, is on board with.
So that's all of the geopolitics. What about the economic impact? Because that's what I'm really interested in. For what you said to me earlier was that this is not necessarily going to have a bad economic impact.
Yeah, so while you see an awful lot of press on this event, seeing it as a really negative one, it's another massive blow to the global economy, I actually looked at it the other way around. Now, there are definitely lots of ways that this could go hugely wrong. You've got all these fracking companies in the US, which have filled the investment world with debt, and if they default on that debt, well, there's going to be all these side effects. You're going to see a lot of regional banks in the US suffer a lot from that. However, if we zoom out a bit further, it appears that lower interest rates have not seemed to have helped the crisis. You saw the Federal Reserve cut 50 basis points, and it actually seemed to scare markets from them doing that. I think an oil price shock of this magnitude, where the price of oil is going down, will actually really be very beneficial, a real buffer towards the global economy. Because, of course, by reducing the cost of energy, you are actually going to make it much, much easier for people to consume much more of it. You're going to see, effectively, a subsidy is being given to economic activity in the world from this oil price war. So from my perspective, I think this is an oil price war that is coming at a very good time. You might even say that war is peace if that war is an oil price war, where everybody is trying to reduce the cost of energy to the global economy.
So doesn't that just sort of shift the risk from the wider economy to the oil industry in terms of struggling with this recession? Instead of having a default in other sectors that are struggling because of the coronavirus, because of a potential recession, now it's just going to be the focus is the oil industry, oil stocks, and potential defaults in, say, the shale sector in the US.
Yes, I would. That's an interesting way of looking at it. Effectively, the entire energy sector, the oil sector especially, that is on the hook for bailing out the rest of the global economy by delivering all of this energy at incredibly low prices. And of course, that comes at significant cost to those oil companies. But in that way, they are bailing out the rest of the world by giving them such free and cheap energy.
Which is why we've seen oil stocks hit so badly this morning, basically.
Yeah, so while everybody was expecting the Federal Reserve to jump in and save the day with lower interest rates, and they tried that out and it really didn't work, I actually think the oil price war is occurring at a really opportune moment, as it will effectively be a buffer, a subsidy, if you like, an energy quantitative easing, which is going to be flushing the world with all of this cheap energy, and it will reduce the cost of activity for so many market participants. So while investors all around the world are seeing this conflict as a very negative thing, I think if you're reducing the cost at the pump for the global economy, this is really going to be a very positive thing, which will be looked back on as something that saved the day, if the day is in fact saved. But that sums up today's Daily Blitz. Thank you very much for watching it. Be sure to subscribe and click the notification bell down below, and we'll see you in the next one.